Sorry. Hello, everyone, and welcome back to the Forex Market Preview. My name is Jason, and if you haven't noticed, this is a little bit late. Reason being, I don't want to get into it, but I had a wrecked Sunday. It was really busy, and we had a bunch of stuff going on, and I didn't get a chance to put the video out. But I figured no big deal, because I would just come in this week, I would do it on Monday, and first thing when I got in the office, and I would show you guys basically what happens after the Forex Market Preview comes out, because I do the general overview of the market with you guys. I typically do some stuff in advance, pick out a couple of good trading opportunities, but then when I come into work on Monday and sit down at my screens, I want to show you the progression that I walk through, and I don't know that I'll do it for every single one. Hang on, something wrong here. I don't know that I'll do it for every single currency pair that I do, because that'll take a lot longer than the 10 or 15 minutes that we typically spend here together. But I do want to at least show you the process that I go through for that. So let's go ahead and start off here with the euro. And on the euro, I'm starting off on a daily time frame, and what I'm going to do here is kind of pick out the support and resistance levels. And if we look, the market came down nicely last week. We had a little rally on Friday, if you could see that, and we're actually sitting against the resistance level right there. And we've got one right under it right about here. Now, the way I do this, guys, way I draw these support and resistance levels is that I'm not using wicks, and this is a personal preference of mine. It's not a necessity that you do it one way or the other. But I typically, well, not typically, but the way I will draw this structure in is I look for the highest close. And the highest close of the top is where I draw in the support line. Now, there are oftentimes a range where the market will come in, especially if you have very long wicks, where the market can find a range of area to find support at. And so I will typically look for that inside of the top of the wick to the top of the highest close. Same thing for when we look at the lows. So in this case, the market came up, we found a resistance level, then we came back down in, and we found a support level. And that support level goes from the lowest close to the lowest low, again creating a range here. And as you can see, that range previously holding that price action. And actually, if we use this as price action, you'll see that the market did dip into that. So there's a lot of different ways that we can look at these in terms of support and resistance. This is just the way I do it. It's not a necessity that you do it this way, but a lot of you guys are trying to figure out how to do this, and if you want to use my method, well, that's why you're here. So we're now looking at that, and as you can see, the market has come in and tapped that low, and then had a nice little pop off of it, and we're looking at another potential low, a little bit lower, around 32.49s. So now that I've got a couple of resistance levels in, now that our support levels in, the resistance level is really all the way back up here now. If we're looking at this, we're looking at 36.34. So we've got quite a distance here to go to the resistance level. So I'm going to drop down to a 4-hour chart and see what I've got here. Now I know, because we talked about it earlier and syndicate members talked about it, and I'll make a little plug for the syndicate. If you're not a member of the syndicate, you ought to go there and do it now, because we put out some of this stuff in advance, and much of it is stuff that doesn't ever make it into the Forex Market Preview. But if I take a look at this, I actually have a bat pattern setting up here, right here to here, and coming down into the 886, and let me just draw it in so I don't have to eyeball it. Pretty close. The 886 down here. So we're looking for this market to decline into 133s, even handle number. Look at the support that exists across there. All right. Again, we're changing time frames, so support and resistance will change slightly, although you can see the support level that we just drew in on our daily chart, and we can tighten that up to kind of identify where that support level comes in at. So as this market declines, we got a little pop out of Friday, and we'll see if we can come back down in and hit 133s. If we do, very nice support level here, and right underneath here is that major support level we talked about on the daily chart. So nice little pattern formation setting up here. Let's take a look at one other thing. Probably not. All right. If this doesn't work out, okay, let's assume for a moment that this level right in here, this 133.55's level where the market found support, let's assume that that ends up being the support level and the market rallies here. Do we have a trading opportunity? Well, sure we do, just because I just checked it. If the market comes into this support level and then rallies out, we're also going to have a cipher pattern setting up. And that cipher pattern is going to settle at around the 786. And let me change the colors here so that we can clearly identify the difference between the two. So we'll make that one that color. So here's our cipher pattern. Okay, and this is going to terminate at the 786, or should. Okay, and look at that, right against that support level that we drew on our daily chart. Is everybody seeing how this is matching up? How we're getting this? This cipher pattern is going to come up and match at 36.34 right out on the daily chart, right where I drew in that support level, or sorry, excuse me, that resistance level. And if we come through that, if we come lower here, we're going to have a buying opportunity at this bat pattern right before we hit the major support level that we drew on our daily chart. And guess where our stops are going on this bat pattern? Right underneath, sorry guys, right underneath this support level. This is what I mean when I talk about building a case for entry. What you're doing is you're taking a look at a series of indicators, and you can be using different ones. I focus on pattern formations here because it's stuff that everybody's got, and it doesn't require you to use any indicators or to use lagging indicators, which most indicators, pretty much all indicators are. We don't want to be dealing, I don't like dealing with lagging indicators if I can help it. The reason being is I want to be predictive in my analysis. I want to be ahead of the market. I want to be looking at, okay, if the market goes lower, what's my play? Back down, let me just throw it back down on the 4-hour chart here. If the market goes lower, what is my play? Where am I going? If the market goes higher, what's my play? Where am I going? I'm not going to act here or here or here. I'm not going to act if the market comes down in. I'm not going to buy as soon as it breaks structure. I'm not going to sell. I'm not using trend continuation. I'm using pattern formations. Now you can use this same principle in trend continuation, in counter trend strategies, and just about any type of strategy that you can come up with. EMA crossover strategies, breakout strategies, you name it. There are a lot of different ways that you can take a commanding presence in the market. The crux of the matter is, where the rubber meets the road is, are you doing this predictive analysis? Are you taking the steps every single day to look and what if the market? When I'll use a great example is when I was in the military, we used to do a lot of war games, and I was in a unit that required us. We were a very small unit, so when we went out into the field, we were more than likely, if we were going to encounter the enemy, we were going to encounter a large group of the enemy, much larger, 2, 3, 4, 100 times larger than our small unit was. And so as we started to develop our plan of attack, we had to constantly be vigilant. And as we were walking through the jungle or as we were walking through the desert, we've got to be asking ourselves, okay, what if I'm attacked from the left right now? What's my play? What am I going to do? What if I'm attacked from the right? What if they come at me from the front? There's this constant role playing. What happens if, as I'm flying in on the helicopter, as we're coming into the LZ, what if we start taking fire? What's the plan there? What if we get down on the ground and as soon as we start to get out of the vehicle or get out of the helicopter, we start taking fire? What if they hit us with mortar attacks? It's every single possible scenario that you can imagine. We've role played again and again and again, and we have standard operating procedures for all of it, for every conceivable situation. And everybody on the team knows what those standard operating procedures are, those SOPs. Those of you who are in the military understand this, intuitively, that this is a necessity. And the reason that we do that, the reason that we have those SOPs, the reason that we role play so much is because we want to make sure that when we're in the real life situation, that we're not sitting around trying to make the decision. That the decision is instantaneous. The decision is automatic. The decision was already made 6 months ago when we were role-playing this out for the 500th time, and everybody's just like, can we please go home? Can we please go on leave? Can we please go on liberty? No, we're going to practice the situations because it's important when we get into that real-life situation. The same thing applies to your trading. As you are building this out, and throwing this stuff up on the charts, you need to be running through those scenarios, those what-if scenarios. And you need to already know what the market, what you're going to do if the market goes higher, what if you're going to do if it goes lower, and at what point you're going to take action. And by doing this, there's not a question when you come to the market anymore of whether you're going to buy or whether you're going to sell or what your position sizing should be or when you should enter or where your stops should go. All of that was made weeks, months ago, years ago in some cases, when you set out the plan. And you will not believe the amount of just liberty and relief that you feel by going and doing this. So, enough said on that. Let's get back into the charts, or we're never going to get through this. But that's an important piece of it. All right. So here is a great example of this. The 4-hour chart. We had the cipher pattern set up. We rallied up into that cipher, caught that right there on 158.26s, and boom, the market rolls over. I can't remember whether I talked about this in my private client group or in the syndicate. I think this was a private client group discussion that we had. But this one hitting target 1 and target 2, so a very nice rollover there. However, that was last week, so we can look back. And a lot of you guys, when you're doing this, what you're going to want to do is when you're testing is you're going to go through all your analysis, and you're not going to want to place a trade. You want to go through all your analysis, leave it alone for a week because you got other stuff that you're trying to do. You got a regular JOB that you got to get through. And then you want to come back next week and see, okay, of my predictions, how many of them came out? How many of them were fulfilled? How'd I do? How's my analysis going? But this is a fantastic example of a trade in place, of a trade in action. So let's go back out to the daily chart because we had a winner here, but that didn't do us any good this week. So let's bump back up to our daily chart because that's how we're going to do this. And we're going to start looking. All right. On the high side, looking left, we've got a little bit of structure in here. Most recent structure being right there. And we've got a support level back down here. Okay. We have another, if we break that support level, then really, it's kind of hard to gauge because we're looking at this and we see support, 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 support. Anytime we've got support levels this close together, I will typically grab the lowest one. All right, this is just an inside tip for you. Reason being, many times these become bear traps. Okay. We get trap as the market presses through and ignores these levels or stalls at these levels, and we get some buyers to come in, and then we come lower. Now, the difference between this low and this low is not all that significant, but this is a head and shoulders pattern, if you guys didn't see that. We've got actually, I'll just draw it in for you here. We got left shoulder, head right here, and then a right shoulder right here. And then we've got another little right shoulder here, but it doesn't really matter. Then the market rallies off of that. So I'm going to be paying attention to this head and shoulders pattern. And a lot of this stuff is somewhat intuitive to me because I've been doing it for a long time. And the more you do it, the better you'll get at it. So I'm going to be looking at now, as I come down to my lower time frames, these two levels. So let's go to my 4-hour chart and take a look at that and just see if I've got anything here. The cipher pattern just paid off. Now we're looking at a retrace back down into some potential structure here. I don't have any advanced pattern formations here right now. So what we're going to want to look at is seeing this support level will hold. Now if I don't have any advanced patterns here, one of the things that I allow myself to do is go one time frame lower down to the 60-minute chart, and I can look on the 60-minute and see if I've got something there. Now let me see. I'm going to do a little bit of analyses. And if I've got anything, I'll tell you what we've got. Some of you are already looking at this, and nope, we don't have anything. We might have had a cipher pattern here, but we don't have the right Fibonacci levels to do it. We did have a butterfly pattern right here. Right, let me draw it in for you so your eye can see it. And we can go here or here, it doesn't really matter. To make it easier on your eye, I'll draw it the way I did. There's a butterfly pattern. But again, doesn't do us any good because that happened yesterday. And basically, we're in a situation now where 156.45s may prove to be some resistance. But as for right now, we've got nothing. So what we want to do is leave this chart alone. Okay, this is not an option for us right now. We can add an alert at 156.45 if we want to, if that's something that you do. But in this case, not really interested. I'm just going to bump to the next highest time frame, and I'm going to go right back out to that daily chart again. Now, daily chart, straight north, right? Nothing. We've talked about 94.70s roughly is where we're going to look for this market to actually terminate. Why are we looking at that? Well, let's look left. Structure leaves clues. The next structure level right here is right at that level, 94.70s. And the market's come all this way. I'd be surprised if we didn't go the rest of the way. Now, I talked about in one video I did, and I don't remember if I did this with you guys or with one of the other private groups that I do, but I'll share with you anyway. One of the things oftentimes we may get a head fake here, where the market will come just shy, and then we'll break structure, and then we'll come back up in to test the level. So I talked about that, and I said, well, we may end up getting that. We haven't gotten it yet. The market just continues here to rally, 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 and now we're looking at a potential move even higher. And so what I'm going to be doing is basically looking for that market to come into that 94.69's level. Now there, I may look at a counter trend opportunity if I can get some double tops in there, if I can get a show of resistance in there, and I can get a good risk-reward profile off of my trade. I could look at a counter trend trade here, and I'm not going to get into that today. I'm basically running through today how I do my analysis. So I'm going to leave that alone. We're going to go over to the Aussie, take a look at the Aussie. The Aussie just completed a butterfly pattern here after a broken cipher. After a broken Gartley pattern. And so now what we're doing is there's a potential buying opportunity right here at 102.67s. But let's go out to our daily chart. We had two great trades on this, by the way. We had two back-to-back winners in the Aussie, and then we took a loser. So let's go out to the daily chart again. Let's start our analysis from the top down. Let's delete whatever that is. And let's start looking. Well, to the high side, our resistance level is really right here. Right there. And we've got a little bit of support level in here we might watch for if the market rallies back up. And then I've got the support level here that I drew in for my butterfly pattern completion. So there we've got that. Let's go down to our 4-hour chart. Let's see if we've got anything else in here other than our butterfly pattern buy. Just delete the rest of this stuff so we can see it a little bit better. Got a double bottom. Do we have any bullish divergence here? I just pulled up my RSI, by the way. So we're sitting on a double bottom, bullish divergence at a structure level. Got a potential CTS trade for those of you guys who have been around with me long enough to learn CTS trading. A double bottom, bullish divergence, looking for the market to rally here. And so there are a couple of different ways that we can play this. We can play it as a counter trend double bottom. We can play it as a butterfly pattern into a 1618 structure. And basically this is a buying opportunity right now as this video is coming out. But this is basically, and I will do this, like I said, we're running a little bit long here. We're almost 20 minutes of this video and I need to cut it off. But I will do this for every single pair that I follow. And I don't have to spend as long because I don't have to explain it to myself when I'm doing it. But I will spend whatever amount of time is necessary to go through this and to identify on the 60 and the 4-hour chart what my trade setups are. Then I will come in every morning and reevaluate. But because I take the time on Monday to go through it in detail and do my top-down analysis, and I know where my key structure points are, then I can look at I don't have to go back to that over the course of the week. I can stay on my 4-hour, I can stay on my 60-minute, and I can basically just like identify pattern formations, and the structure lines are already in there. So anyway, I hope this was a valuable lesson. Send me a reply to this email. Or send me a reply to the email. Tell me what you thought about the training that we did today. And if you like this type of training, like I said, the syndicate and more importantly, my private client group is something that you'll want to be a part of. I don't think you can't just buy the private client group. I think you've got to email me and ask me for the link to get in. But if you'd like to do either one of those, feel free to send me an email. And if you thought it sucked, send me an email and tell me why it sucked. Don't send me an email and just say you suck, because that's not helpful. Might make you feel better, but it's not very productive for me. So send me a note and say, no, I didn't like it because X, Y, and Z. And then I will do my best to improve. I do this for you, not for me. And so anyway, send me the note, and I'll talk to you guys soon. Until next time, trade empowered, live abundant. My name's Jason. I'll talk to you guys soon.